right. Let's see. Huh. 30. All right, just a second, guys. All right, good morning, guys. Today is Friday, June 23rd. And as usual, I'm going over analysis for US 30, gold, and EU. So personally, I took so I'm down today about 2%. So this is I always tell you guys the importance of being aware of when to trade and when not to trade. So this first US 30 buy that I took yesterday, I took it at around what 7 p.m., 8 p.m. Eastern Standard Time. And that's when US 30 dropped back heavily down. So when I say to avoid trading before, I mean the trade I entered was valid because during the live session, I did say this is what I was expecting. I was expecting this trend line to be retested and then US 30 to go back up. And down here, we had a 4-hour bullish high and low and daily bullish high, which is what is here. However, so that was my best entry. My second best entry was either using the crosses indicator. So if we go to the crosses indicator on US 30, we didn't get any buys using the crosses indicator, right? Because this is the buy that I was waiting for here. So I was either gonna take a buy here, or my other buy was based off of the breakout scanner, which is the trade that I took. It went halfway into profit, but then went back and hit stop loss. But this is the importance of ideally sticking to your ideal trade, because also on the other hand, this morning, I had a pending order at 775. It actually went up into profit about 3,000 in the morning. But for me nowadays, I either hold to TP or stop loss because I was trusting this 4-hour bullish high and low and daily bullish high and low. But if you ask me, I think what's happening here is what Steven mentions as, let me just take this off. Steven calls this accumulation manipulation to the downside. And then I'm still expecting US 30 to break back up and distribution. So I think what they're doing right here, and I did mention yesterday, during this, especially high time frame order blocks like this daily and whatnot, they know a lot of people are trying to buy here or have buy stops here. So they try to fake people out to the downside and stop hunt. and then swing price all the way to the upside. On the other hand, we do have a daily bearish high here and daily bearish low. But if you ask me, these dailies cancel out each other. So what are we left with? We are left with a 4-hour bullish high and low. So it's a game of probabilities. So we have two dailies that are fighting for liquidity. But what else do we have around there? We have this 4-hour bullish high and bullish low. So I'm expecting this was accumulation. And if Steven is in here, I don't know if, yeah, he's not. So I'm expecting this was accumulation down here, manipulation to the downside. And then if we do get a close above here, get that up. So that's what I'm expecting. Unfortunately, I've gotten stopped out. So I really, this first trade, I shouldn't have taken a loss because I shouldn't have entered that trade. Best case scenario, I should have used half a risk, half percentage risk. So going forward for me, I'm not gonna, if I take any trades between 3 p.m. and 10 p.m., I will always use half risk. So this one I was risking 1%. So I will always use half risk or use double the TP, double the stop loss. So like here, the stop loss was 100 pips. So in future, if I ever take a trade between 3 p.m. and 11 p.m., I will always either use double the TP or use half the risk. So that's how, for me, I've grown as a trader. I identify a mistake. What did I do wrong? So the trade, yes, the trade was valid. It wasn't my ideal buy, but again, I entered it based off of a strategy, based off of the breakout scanner. And you can see we had not had a breakout buy in a minute. So the trade was valid, but the reason I lost the trade was because I traded during a time where there was manipulation. So I'm still expecting US 30 to push back up. Gold, I was in a gold buy based on off of the reversal strategy. Give me one quick second. All right, just a second. Let me look at something. All right. So here for gold, these are the trend lines I had drawn yesterday. So we had 3 trend lines. 1, 2, and 3. So I was expecting gold to go to 1900 and 1905 area. But again, static trend lines don't always have to be retested. I don't know, I'm getting a little bit of interference. Let me see if I can fix this. Give me one. All right, so hopefully that interference is gone. We also just had news right now. But anyway, so the other trade so yesterday I drew up this. So my ideal buy on gold was 1900, 1905 area. But I did draw this up for you guys during the live session yesterday. I did mention that we got stopped out of the reversal on gold a few days ago on the 5-minute. Unfortunately, we didn't catch the 15-minute buy, but if you took the 15-minute, you'd have gotten faked out as well. And then this is the 30-minute. So this is the one I entered and I made like 1% for that one. So this was this one, this trade that I took on gold. Just a second. All right, so that was the gold one. And we need to wait for the market to stabilize after news. So what else do we have? EU. EU is another one. We talked about EU using the crosses indicator yesterday. So we are looking for sales yesterday on EU. Right, so this was the sell on EU to the downside, could have gone straight into TP. And then, of course, easily you could have taken the reversal also on EU. So you could have taken the reversal easily on EU, and this was on the 5-minute. This was the perfect. So this is how you can play all these indicators together. But anyway, let's see if we can get any trade. I will hop in on US 30 again. If we do get a closure above and retest of this 4-hour bullish high and low and daily bearish high and daily bullish high and low. The reason for that is this is what I'm expecting, right? Accumulation, manipulation, and distribution. We also need to look at, so nowadays when I trade, I use all my indicators as a confluence when taking a trade, other than the reversal indicator, because I really have not really tested it to see how you can use it to take a trade that's not a reversal, just to take like a regular trade. So what I'll be looking for here, when I turn on the zones indicator, I want to see buyers sitting here. So unfortunately, we do have sellers that are sitting here. So as much as this is a 4-hour bullish high and low, I would, for better confluence, I would want to see some green here. So meaning that there are buyers here. So as much as we have two bullish order blocks, we have some sellers that are sitting down here. So if I know we have sellers sitting here, I want to see what areas could these sellers be trying to bring price to, right? So I don't trade just by knowing they're buyers or sellers. For me, order blocks will always take precedence over buy and sell zones or supply and demand zones. So if I know we have sellers here, I do see a daily bearish high here where these sellers can bring price down to the daily bearish high. But on the other hand, when price gets to the daily bearish high, we also have a daily bullish low down there. So as of this point, these two indicators, the markups and the zones indicators, are giving me conflicting results. So at that point, I just turn off the zones. Right, I'm still looking at the 4-hour bullish high and low, also looking at the hourly time frame. So nowadays, right, I draw my trend lines on the hourly, and I do expect hourly trend lines to be retested. So it did not happen here at this point. It might happen down here. It might happen down here instead. Now, again, static trend lines don't always have to be retested, but the reason I draw the trend lines and see where price can retest it is that I'm curious to see what zones where the trend line would be retested. So around 33,535, around 33,439, what do we have? 535, 439, we have a daily bullish low at around 538. So this would be literally at the retest of this trend line. So US 30 can easily come back to the daily bullish low around 33,538. So this is to tell me if I take a buy on US 30 here, this is a trade I might have to hold for maybe until next week, because this would be, I would want my stop loss to be below, even at the very least below this daily bearish low. So around maybe 320. And we are at 778. So that is a 400 pip stop loss. And since I do a 1:1, my TP would be 400 pips as well. Now the question is, right, do you want to hold a trade for that long? So for me, if I'm going to enter this trade, it will be, let's try this. This would be literally a swing trade. That would be the trade. I wish we did have buyers around here, but unfortunately we do not. So this is the trade that I would take. If I want to maybe reduce the stop loss a little bit, maybe bring it below the daily bullish low, which would be somewhere below this trend line. or yeah, so worst case 33,500 if you don't want such a big stop loss. So that's the best, but for me, literally, since I'm just used to just doing by default a 1:1, I would just do it there and hold it for like a week. Now this trade, since I'm already down for the day, I'm actually now down that much, 2%, about 2% or 1.8%. So if I take this trade, I will take it with a higher risk, because I do anticipate this accumulation, manipulation, and distribution. But right, I have to go to the other nowadays, right? I just go to the other, all my other indicators and see if I can get any other entries off of them. So using the US, I'm sorry, the crosses indicator, the buy is so far away. So by the time we get a buy, right? So I really cannot wait for the buy. I cannot use the crosses indicator for now to give me any entry. The breakout indicator might give me a breakout buy on US 30. But to be honest, looking at all of this, the earliest entry I'll get is a break and retest of the 4-hour bullish high. So these other indicators did not really help me in any way to get an earlier entry. The reason I normally go to the other indicators after identifying a trade is just as a confluence, because for me, if for example, the breakout scanner was about to give me a buy on US 30, if the crosses indicator was about to give me a golden cross on US 30, and here I know we have a 4-hour bullish high and low, and we have a daily bullish high and low, that would give me like a 95% probability of this trade hitting. But right now, the only thing I have to enter this trade is this 4-hour bullish high and low. We have a daily bullish high, but I did mention this daily bullish high and low cancels out with this daily bearish high and low. So for me, the probability of this trade hitting drops down to about 70%. Looking at the reversal indicator, I really have not found a way. I've never back tested on how we can use it to enter regular trades, but just by looking at it, I'm trading on the 5-minute. If I'm entering a buy, I want to see a buy around where I'm trying to enter. So we recently just got a buy on the reversal indicator on US 30. So this is good for me. So this is good confluence. Another additional
Do
slightly
you have
is
a trend line there also? Not to cut you off, my fault, on your
on what,
study.
on 5-minute or 1 hour.
I'm on a 30-minute right now.
If I change this to 30-minute, so the entry, so this just closed above. Give me 1 second. No, it did not close above. It closed above the 4-hour bullish low. Okay, here's the other thing. We went over this way back when I used to do manual markups. This is what we want to see. We want to see order block being retested exactly to the pip. So you see here, this 5-minute closed above the 4-hour bullish low. The next 5-minute literally retested the 4-hour bullish low exactly to the pip. So this is what we want to see. So if this does close, I will enter my last US 30 trade for the day. Given that it's a 500 pip move, I might go for a higher risk. So nowadays I just take like 1 or 2 trades a day, and so by higher risk I mean I'll probably risk like 2% for this trade, which if I win this trade, it will take me back to break even for the day. But since it's a trade I'll call on the live session and it has like a 70% probability, I'll tell you guys to enter with a 0.5% risk. Yeah, so any trade that I'll ever call on the live session for everybody, it will never go above 1%, because I don't really want to teach what contrary to what I normally mention. So I always say, if entering any trade, if you know what you're doing, sure, you can go more than 1%. If you're still learning, never take any trade that's more than 1% risk. You said the 30-minute trend line. I really did you where did your trend line come from,
It's
Livy?
actually the same on the hourly too. It came from the two lower lows right next to it right there.
This one, this two right here. Let me delete this circle. So this was just an area of interest for me. Are you talking about these two lower lows right here around 33,833? I don't know if you're muted. But if it's this ones, I would consider this two more of an equal low as opposed to like an area you can draw a trend line. In any case, if I was drawing a trend line here, let me zoom out a little bit. If I was drawing a trend line here, I would draw it this way.
Wish I could show you my screen.
Is it this one?
Yeah.
Now this, yeah, this right here, the one I just drew is a trend line, but just these two by themselves, if you're starting at this one, it's I would consider this
They
more.
don't look the same on my screen. That's all you can see.
Okay. You can DM me that. But this right here is a trend line. Right here. Now, if we do get this hourly closure above that particular trend line, that would be a nice confirmation for a buy. But again, if you're trading trend lines or 9 EMA, you always want, so if right here we're trading this hourly trend line, we would want an hourly closure above this trend line, and then we would want to wait for the next hourly candle to retest that trend line and close above. So that means for just to trade this trend line, we would have to wait for, what time is it now? We would have to wait for another hour, and it doesn't look like this hourly for the next 48 seconds. I mean, anything can happen, but it doesn't look like this hourly candle will close above that trend line. So which means you might have to wait for 3 hours to have like a high probable entry based off of that trend line. And also the reason we need such a huge stop loss for this trade is because this trend line hasn't been retested yet. This trend line to the downside has not been retested yet. So price can literally come back to 550 where we do have a daily bullish low. But if this candle does close, that will be the trade for you guys. And the return I'll count, it will be 0.5%. Personally, I'll go in with a higher lot size. Actually, not even 2% because I'm going to stick to my rules. Let's see. Yeah, the probability is 70%. So for me, based on how far down I am, I'm only like about 2% down for the day. And given the size of this stop loss, I'm not really going to ride a 0.5 trade with the size of this stop loss. But if it's your first trade of the day, use a 0.5. But for me, if I'm riding like a 500 pip move, I'm going to go heavy on such a trade. So let me just adjust this. And if I lose this trade, I will just be down about 3.5 for the day. So which is a bit high, but I've made much more than that recently. Did that close? Yeah, so that should be the trade right there. So that's the trade. The percentage, so if you're entering this trade, use a 0.5% risk. Give me 1 second, let me enter this. My risk is that. Buy. Okay. If you want to lower, if this stop loss is a bit too far for you, adjust your stop loss to maybe below this daily bullish low. So right now the stop loss is around 33,277. So you can adjust it to just below this daily bullish low. So maybe 33 477. So that will give you 200 pips back and probably give you maybe 1:2 risk to reward. So yeah, but for me, I'll just leave it there. And since I don't need this markups anymore, since I already know what I'm in the trade, I don't need this. So this is what we are expecting to happen, right? Accumulation, manipulation, distribution to the upside. That is what we're expecting. So I'll go gold. Gold, what do we have? So here's the thing for gold. Look at where gold spiked up from. So the reason I kept holding this gold buy. So I bought gold at 1914 based on the reversal indicator. I rode all this whole move to the upside. And this is the importance of knowing what order blocks are and how price affects them. So here, when price was here, of course, I'm expecting some consolidation. And if I turned on the zones, we had pretty much buyers just down here, just a lot of buyers on gold. And you can see around the hourly bullish low, price literally rejected from the hourly bullish low and went back up and then pushed all the way back to the top. Where is gold rejecting from? Like this is too easy. 4-hour bearish high. So this would have been a perfect area to enter any sells you had on gold, or if you had any entries on gold. However, if you ask me, looking at the hourly time frame, what do I know? What's another thing I know about EMAs? EMAs also normally get retested, so I do expect gold to go back up to maybe around 1939, 1940 area, where which is where we have the 200 EMA, and any rejection back to any strong rejection back to the downside is should happen from that area. Or on the other hand, if gold is to go up, if it does close above the 200 EMA on the hourly, retest and close above, gold can then shoot up from there. But you can see the importance of knowing how to play the order blocks coupled with the supply and demand zone. So here, right? You see a 4-hour bearish high. So if you're really looking to sell gold here, what you'd be trying to look out for is sellers that are sitting here. So you have a bearish, higher time frame bearish order block, and then you have sellers that are seated around there. On the other hand, right, this is nowadays I just do process of elimination, right? So if I have a 4-hour bearish high, I have a 4-hour bullish high and low out there, I cancel those two out. So I'm not going to look for either a buy or sell. So the next thing I would look for is the next order blocks, high time frame order blocks around there. So since I've canceled out the 4-hour bullish high and low, and if I really don't want to see them on my charts, I can come out here and uncheck them here, so that then I'm only focused on what's remaining on the chart. Okay, what are the other zones we have on the chart? Hourly bullish high, hourly bullish low. Those two. So we have 2 hourly order blocks. So those two cancel each other out. So I can just come out here. So for me, I don't do this because subconsciously I'm able to take them out of my mind. But if you just don't want to see them on your chart and you're canceling them out, you come in there, take them out. What are you left with? Daily bearish low that's all the way up here. What price point is there? 1941. Literally, I didn't even look at what was around 1940, but I just gave you guys the analysis of retest of the 200 EMA on the hourly, and this is going to be the determining area on if gold goes back down or if gold goes back up. So just by doing process of elimination and removing the 4-hour order blocks that cancel each other out, the hourly opposing order blocks that cancel each other out, you take off all that noise, you're left with your perfect sell area, which is 1940 area. Yeah, so for me, if I was looking to sell gold, I would look to sell gold at 1940 area, which we should also have a reversal. This is 1916. 1916 area, that's 30. We do have a reversal entry on gold as well. So if I come in here,
What about the golden cross on gold on the 15-minute?
For me, if you ask me about a golden cross, I mostly can answer golden crosses on US 30. I don't trade golden crosses on gold. So I'm used to even the win rate that I talk about. I trade them on US 30. So I don't. So buy. Let's see. Okay, so if just by looking at this, and let me even turn on both buys and sells on gold. Okay, so if you're looking to buy this golden cross right here, the entry would have been, this is the golden cross, this would have been the buy, and then you enter here 100. For me, I do 100 pips TP and then 100 pips stop loss. So that would be the entry for gold. Would have gone up about, oh no, it would have been here. Is it this one? Give me a second. Yeah, it would have been this one. Okay, so if you enter that trade, would have been a bit in drawdown. I do not trade the golden. Well, not I do not trade. I just don't. I like focusing on one. So for me, the crosses indicator, the back testing I've done on US 30. I really didn't do back testing on gold, but you can see here just by visually looking at it, all these cells would have hit TP. But if I was just looking at it, yes, it is a valid buy, because when was the last death cross on the 15-minute time frame? It was this is Friday. The last one was Tuesday. So yeah, this is a valid golden cross on gold. So, right. So if I was analyzing, I just analyzed a sell on gold, and then I analyzed the golden cross buy on gold. So at that point, I have two conflicting trades. The other hand, it's Friday. So if you have conflicting trades on any instrument after your analysis, just use all indicators. So right now I have two conflicting trades on gold. What do I do? What other indicator do we have? We have the breakout scanner. So I come to the breakout scanner. What do I see on gold using the breakout scanner? I'm pretty sure it's almost probably gave a buy, probably broke out for a buy. Let's see. Yeah, so gold broke out for a buy, but it was all the way down here. So we are literally 200 pips in profit on a breakout buy on gold. So the breakout scanner at this point really does not help me, other than telling me gold already broke out for a buy 2 hours ago. So even at that point, the breakout scanner really does not help me to see anything. So the only thing I can trade right now with gold is the order blocks, knowing that we have sellers here as opposed to buyers. And trend lines, this is the trend line we have. So this trend line has not really been retested yet. So yeah, right now my bias for gold is a sell at around 1940 area. But since I'm already down on my account today, I'm not going to take any gold entry. EU as well. So nothing really on EU. I missed the trades on EU yesterday. And for this, I was about to mark up a reversal on gold. So this reversal on gold right here. So not to say, right, me marking up a sell on gold, I can be wrong. Literally, I'm down about 2% for the day. So it doesn't mean that I'm always 100% right. Nobody's ever 100% right. So this is just my analysis and my rationale of entering trades. But for me, I'm aware of the risk. I'm aware my risk management is good. So that's what's important, just to understand your risk management. And then if a trade makes sense to you, like literally, you should just stick to it. So for this gold reversal, so this one already hit TP. So what I'm looking here, I'm looking for here, this is the trade that hit TP this morning. So I'll go ahead and delete that. So right now I'm only looking for sells, and I have the, if I bring this text, I wrote some documentation on what to look out for, reversal strategy down here. So number one, identify a trend on the 5-minute time frame. So on the 5-minute time frame, let me turn off all these signals right here. On the 5-minute time frame, I do see a trend to the upside on gold. Okay, so that's step number one. Step number two is, where is that thing? See if I can make this a bit wider. I'll bring this here. And for those of you who still do not understand the reversal strategy, you should take a screenshot of this. So identify a trend. I can see gold has been consistently above the 9 EMA for a while now. So I come in here. So that's number one. Step two, do your manual markups. So your manual markups, identify an area of interest. The area of interest is the last time price was consolidating or consistently below the 9 EMA, below or above, depending on if you're looking for a buy or sell. Also, I like working with whole numbers. So for me, my area of interest will be 1917. So this right here will be my area of interest. And then the other part, the last price. So from the area of from your area of interest in the direction of the trend, go ahead and draw. So for gold, 150 pips. So 150 pips for gold here is 1932. 1932 here. So somewhere around there from my area of interest. Again, an area of interest is not static, but you just want to look at the last area price was consolidating before a trend broke out. Okay, so you go ahead for gold, this is 150 pips. For US 30, this is 500 pips. For pairs that move like EU, and all of that is in here. For pairs that move like EU, it's 50 pips. For pairs that move like GJ, this is 100 pips. Step number 3, indicator settings, part 1. So the first one, what are we trading here? It's gold. So for gold, and this is always on the start on the 5-minute. That's my workflow. You can start on the 15-minute if you want, but for me, these instructions are based on people who are starting on the 5-minute. So here, what am I looking for? I'm looking for sells. I turn on the sell only because I don't want buys to mess with my psychology. Okay, for US 30, NAS, gold, and Bitcoin, delay here should be 1. Breakout pips 50. Breakout EMA 9, of course, by default, and close should be the source right here. Give me 1 second. Close on 5 and 15-minute time frames. Okay, and then of course on time frames 30 minutes and above, change delay to 0 and source to fast MA. If you want, but ideally, if you really never want to change, so originally the strategy itself is based off of the source being closed. So whether it's the 5-minute, whether it's the 1 hour, originally the strategy, this should be static. Fast moving average or fast MA just gives you safer entries, if that makes sense. So you can backtest and see how that affects that. So we're not, of course, gonna do part number 3 because this is not an FX pair. So number 5, of course, select either buys or sells only, depending on what you're looking for. So here, I'm only interested in sells. So I go ahead and select sells only here. And then select buy or sell. And then first entry should be on the 5-minute time frame. If you get stopped out on the 5-minute, move to the next higher time frame, 15-minute. Get stopped out on the 15-minute, move to the 30-minute. Get stopped out on the 30-minute, move to the 1 hour. You will rarely get stopped out of 5, 15, 30, 1 hour. The example I just gave earlier this morning, we had gotten stopped out on the 5-minute for the buy when we were trying to buy. And then for the 15 minutes, I wasn't.
Honestly, if you do, don't trade it because I had to stop trading NAS because of that, man. On the 1 hour, it stopped me out. So after that, I was done.
Yeah. For 15 minutes, we would have gotten stopped out, but I wasn't trading that day. But if I was trading, I would have taken that trade and gotten stopped out. But the 30-minute trade is the trade I just won this morning at 1913, and I went with a higher lot size. So here, this is a valid sell on gold. So the way I would enter this, just 1 second. Okay. So this should be a valid sell on gold. Now, what areas are we looking at for gold? I hate how US 30 is just ranging at this point. This is why I don't like trading on Fridays. Okay, so if you're going to take a sell on gold right here, where do you want your stop loss to be? We have a daily bearish low at around 1941 area. And we have a daily bearish high at around 1960 area. So if I was taking just my regular setup, sell on gold. Okay, so there's something I forgot to mention. So the manual markups, I think I put something about them. This is the last price from the area. Okay, select buy or sell, wait for an entry after your threshold. So here during this 150 pips, if we got a sell anywhere between your area of interest and the top of your threshold, and we got a sell, we wouldn't have taken that sell on gold because we want to avoid fake out. So any sells or buys, depending on what direction you're trading, that come up within the threshold, those are invalid. So this is the importance of manual markups. They just give you that safer entry and the most probable entry. So that's another thing. So this is why we draw manual markups, and there's 2 types of settings, right? There's the manual markup setting, and there's the manual markups that you draw manually, and then there's the settings within the indicator. So don't confuse the 2. I have literally lined them up for you. What is a manual markup? What is an indicator setting? So here on gold, this would be the sell on gold. And then for me, let's see. And then for me here, right, my stop loss, my TP and stop loss nowadays, I'm just right. I'm moving to be an intraday trader, so I hold trades for a couple of hours or maybe days. So that's why nowadays I go for higher TPs and higher stop losses. Okay, where is this stop loss at? It's at 1940.561. So what do we know? 1940.561. What do we have there? We have the 200 EMA on the hourly. We also have a daily bearish low. So literally gold can spike up, stop you out, and then drop back down. But eventually we have sellers are in the market on gold. So we have, so right, the question would be, is your stop, do you want your stop loss to be 100 pips? Do you want your stop loss to be 50 pips? Do you want your stop loss to be even 200 pips, right? So that's a question. So the target for this trade, the target for the sell is A, just to, so this is a valid trade. Valid trade for me. I just have room for one more trade, so this is why I'm not even taking any other trade, because I'm already down like close to 2% for the day, so I just don't want to hop in on multiple trades. But this sell right here based on the reversal is a valid sell on gold. So the target, if you, to help you gauge where you're going to put your TP and stop loss, the first target to the downside is the 9 EMA. So that's automatic. The 9, at the very least, the 9 EMA on the hourly, which is around 1923-24 area. Okay, the next target on gold would be the 1915 area, because this trend line right here has not been retested. So excuse me, those are two possible targets to the downside for gold: 1923 and 1914. If I'm counting the probability of that trade, of course, the breakout scanner really does not help us in any way for the sells. Neither does the golden crosses indicator, or the crosses indicator does not really give us any entry. You can see for this golden cross would have been all the way up, or you'd have been in drawdown. So yeah, so for me, I'm not looking for buys on gold. I'm more inclined to sells. Also, well, ask yourself the other question: what day of the week are you trading? It is a Friday. So what do you expect on Fridays? A lot of manipulation, a lot of trending. So the overall direction on gold can be a buy, but given that it's a Friday, do you think they're going to take up price on a Friday or on a Sunday or Monday? And we've gone over this in the last few weekends back to back. So if you're conflicted, if you're looking for a buy on gold, honestly, I would say look for the buy on gold Sunday, mid-Asia, or Monday, Sunday, or between Sunday and Monday, or Monday London session. Yeah. Okay. Give
Well,
me,
I'm in that gold buy for the cross, so you're saying the sell overrides the buy, in your opinion?
in my opinion, the sell overrides the buy. The golden cross buy, it is a valid buy. Like, just looking at it, if it wasn't Friday, because for me, if I'm trading crosses, and again, I can advise you more on US 30 crosses, which is what I trade. But even looking at the gold crosses, you just have to ask yourself, if I'm trading a cross right now, golden cross, when was the last death cross? The last death cross was literally 4 days ago. So this golden cross, yes, it has a very high probability, but you just don't trade one indicator by itself. You look at other indicators, which is what I do nowadays. If I get a buy, all my indicators have to convince me with like a 80 to 100% 80 to whatever 98% probability that my buy is probable, not just one. As much as the crosses indicator has like a 90 to 98% win rate, remember, as much as it has a 90% win rate, it has that 10% fail rate. So you don't know if this right here, this golden cross buy, is that 10%. You know what I mean? So you need to look for, this is why I give you guys access to all these indicators, so that you can be like, okay, the golden crosses indicator, or the crosses indicator, which has a 90 to 98% win rate, is telling me to buy. That's fine. That's amazing. But I also have the breakout scanner. What is the breakout scanner telling me? The breakout scanner is telling me, hey, look here. I gave you an entry 2 hours ago. So if you're trying to chase this buy right now, you know, we are in a buy momentum, but hey, be careful about that. So you get the breakout scanner giving you a red flag on your buy using the golden cross. And then you say, okay, that's just one red flag. What else do I have? I have the uh I have the markups, right? You come to your markups right here. What are your markups telling you? The markups told us that we had 2 hourly bullish and bearish zones. So those two cross out. The markups also told us we had 2 4-hour bullish and bearish zones. Those two cross out, right? Taking off the noise. Even here, we have 2 30-minute bullish highs and lows. So again, those two cross out. So I can come in here easily, take them out to reduce the noise. Same thing, we have 15-minute bullish high, bullish and bearish zones right there. Take that noise out because both of them cross out. What are you left with? You are left with, if this, once this loads, what are you left with? It clears out so much. You are left with this daily bearish low. We have sellers right here. As much as we have buyers down here, there's no order block for the buyers to use other than maybe price. Again, price does not always use order blocks, can use fundamentals, price action, whatnot. But yes, we have buyers down here, but guess what? What do the sellers have? Sellers have more ammo with the daily bearish low. So at that point, using all my indicators, as much as my favorite indicator with a 90% win rate is telling me to buy, hey, I'm probably going to say, okay, I understand you're telling me to buy, but maybe this time I'm going to listen to the other two confluences that I have, if that makes sense.
Yeah, that makes sense. Thanks.
Yeah. All right. I see US 30 is popping up. Give me one sec. If you guys have any questions, go ahead and compile them. Let me just take a quick call. Okay, I'm back. Any questions from anyone? Again, since we're already in that
Did you get
trade,
my DM for that pick?
let me look at it. I look at it on the phone. Okay, so I see yes. And this is on the 30-minute or hourly. Okay,
It's the
yeah, so
hourly, I
that's
think.
so that's the same one too also. So on the hourly, so for you, the only difference with the picture you sent me, yours came from this, yours originated somewhere up here. I forget where it is. I think this high low or something. Yours, because mine are, so it's the same trend line, but mine I just originated it from this lower low. And I think for
Okay.
you might also be using another provider. So for me, my US 30 chart is in Oanda. So that's
What do
why,
you recommend? Oh, that's because that's who you
yeah,
okay,
yeah.
I
So
got
it
you.
doesn't matter. So I used to use currency.com, but right now, since they stopped supporting instruments, I'm using Oanda.
All right.
Yeah, but it really doesn't, even with our indicators, it really does not make too much of a difference. And for me, I'm lazy. Normally, I just used to use the first one that showed up. So like for example, I would type in US 30 and currency.com used to be the first one. So technically, I should be using Black
Yeah,
Bull.
Black Bull is the first one, so I just type it in and hit enter, whatever it is.
Yeah, yeah. I'm only using Oanda because I've heard about Oanda a lot. I've heard about capital.com a lot. So it's mostly just preference or whatnot. Um, yeah, so that's gonna be it for the day for me. I'm not in this trade, but it is a valid trade to take on gold. The reason I'm not taking it is I'm already in a US 30 buy and I'm already down. I'm already down like what, close to no, not 4%, close to 2% for the day. So this is not a I should be, worst case, here's what I could have been down because what's my TP? So technically, right, I should be only down like 0.5% for the day. So because this first trade right here, yes, it was a valid trade, but I should not have traded it because it just came. So I always tell you guys, try to avoid trading between 3 p.m. Eastern Standard Time and like 10 or 11 p.m. Eastern Standard Time. You will save yourself like being faked out, and then you'll be like, oh my God, I should have just waited. Because right, like this morning right here, this US 30 buy, the reason I went for a higher risk was to recover the loss I took on US 30. So literally, if I didn't take this US 30 buy, this the first one that hit stop loss, this US 30 that I took there, I could have used a smaller TP and stop loss, and I could have made the 2K that I wanted to make. And at that point, I could have easily been up 2% for the day because my gold trade hit TP. So this is how one, just by not following one of your rules, can literally either take you away from making 2% a day to being down 2%. So literally the trade is always going to come. So eventually price did come back down to my perfect entry, but because I was trying to make up for the loss I had already made for just jumping in, it was a valid trade based on the breakout scanner, but you know, I should have just stuck to my rules. Livy,
What
yo, good job, man. You're taking fewer trades. Look at this, is amazing, man. Yo, this is good. 1919 to 1936. So you literally rode gold for, what is that? Like 200 pips or 150 pips. This is good.
Yeah, I'm trying not to look at the charts as much no more, man. Trying.
Yeah, but let me tell you, once you get the hang of this, it is so like you'll be setting that as, what is this, 100K account or a 200K account?
It's a 100K account.
Okay, and what was your stop loss for gold?
For that trade, I think it was it was 100 pips.
Okay, so 1909, that's good. So can you imagine, right? You are up 2% just like that. Instead of taking 15 trades a day and all of that, you literally are up even more than me, right? But even for me, I took about the same trades I did, but you had a better win rate. But, you know, so can you imagine taking this and like during the week, you'll get like two of these setups, like two good setups like this or three setups. So imagine just taking one and then you wait for the next one, you take the next one. So in like 2 weeks or even sometimes 1 week, you'll be done with phase one and you won't be like up 1K, down 3K. No. So this is good, man. Congrats.
Yeah, the next struggle is waiting for the perfect entry. I struggle with that. Like I have to stick to what I think price is gonna go and just wait for it to get there. I have a bad habit
Yeah.
of getting in early.
Yeah. Now, see, even for me, right, I'm still like I've been good with it nowadays, but you can see like even today, I didn't go for my perfect entry but the most important thing for any trader, like always make sure the trade is valid. Like, do I feel bad that I lost this trade? No, I do not, because it wasn't through FOMO. The worst thing you can ever feel as a trader is taking a trade and saying, God, I lost because I FOMO'd in. For me, I literally don't feel bad because I lost this trade, because you know why, right? I have this trade requirements right here. The first requirement, number one, right? If a trade does not satisfy trade requirement number one, I'm not going to enter that trade. So trade requirement number one, right? Is the trade valid or not? So for me, the reason I entered that trade was because of the breakout scanner right here. Breakout, where do we have the breakout scanner? Yeah, breakout scanner on US 30. On US 30 right there. And that's the buy that I took. So it wasn't FOMO, it wasn't FOGI, it wasn't anything. I took it. To me, it was valid. US 30 was forming higher highs. But of course, in Asia, which is what I was aware of that risk. They just manipulated price to the downside. So once you at least get, so long as you're not forming into trades, the other part you're working on, just waiting for that perfect entry, it will come, right? Yeah, so that's good. That's good. Yeah, so that's gonna be it for me today, unless anybody else has any questions.
I have one more question. I know waiting for the cross of the 9 EMA and the retest is ideal entry.
Mhm,
I've entered a few trades early based off of order blocks.
mhm.
Do you do that or?
Yeah, I do that, right? Because it's, again, so long as it's not FOMO or anything, like what did I just show this morning? This US 30 trade. This US 30 trade is not based off of a breakout scanner, is not based off of is not based off of what else? It's not based off of breakout scanner, it's not based off golden cross or any crosses indicator, is not based off of reversal. It is purely based off of the order block, because the order block will give us that early entry. And up here, when price comes back up here, we will then get the crosses entry. We'll then get the breakout scanner entry. So yeah, so order block, it is a valid, right? It is a strategy by itself. So it's part of a strategy. Yeah, so I do that. Like this trade we just entered right now, it's purely based off of order blocks.
Okay, cool. All right.
Yeah. All right. Last but not least, again, the video I sent out yesterday, it's not my video. Again, this is a video I just came across on YouTube. Like, if you haven't already done so, just go ahead and watch it. Like, this guy, just the way I tell you guys, it's all about numbers. So you guys can see this, right? You can think that all these losses are a lot. Like, literally on a 200K account, this is 2%. This is nothing, right? As much as it's a lot of and this is why I don't focus on monetary values a lot, right? So the guy in here, he talks about, right, just know like how many trades you take in a day or in a month, and then break down risk per trade, and also know like what kind of trader you are, and wait for those setups that have like a high probability win rate, and then go in for 1%, 2%, etc. And then you'll be all set, and then you won't have to worry or
Yeah, I
keep.
watched it. It makes
Yeah.
sense.
Yeah, so he broke it down really, really nicely. But anyway, I will talk to you guys on Tuesday. So again, on Mondays, we won't be having live sessions because I have another commitment, but I will see you guys on Tuesday. All right, guys. All right, guys, have a happy weekend.